Welcome to 2022, everyone. This is Chris Buss with Traders Profit Compass with your morning look at markets for Monday, January 3rd. I certainly hope all you traders had a awesome holiday season and specifically Happy New Year's over the weekend. I hope you had a good time, got some time to spend with the family, got your fill of college and pro football and all that good stuff, and hopefully had at least a few minutes to contemplate your 2021 and think about what you want to do different in 2022. And nothing to it but to do it. Put your mind to it. You can do anything you want. And if that includes me, I will help you every bit I can along the way. And so we can get to our goals, whatever they may be. So it is 5:11 in the morning, a little on the early side. If you'll remember, I've been drafted into Uber duty to pick up my folks over at Port Canaveral as they return from their cruise. So on the conclusion of the video, I'm going to be heading out to do that. So I will be out of the office most of the day by the time you ride over there and ride back and drop off and switch cars and all that kind of stuff. The day evaporates pretty quickly. I'll be back in the early afternoon sometime, but won't be close at hand. Let's get up to speed where we wrapped up on Friday. And I think one of the most important things to remember is we had that big 12/31, December 31st year-end option roll-off. A lot of gamma rolled off. We talked about the call walls that were out there. Those are all gone now. So I think price over the next couple of days, and remember the Santa rally officially extends through tomorrow's trading. So we got a couple days here where that Santa rally, so-called Santa rally, is still in effect. And also, don't forget, I've posted this graphic a number of times in December, but January inflows, money's coming into the market. It's the biggest month for inflows. And so I think there's going to be a supporting bid under the market. Tough market. I mean, anything can happen, of course. And as soon as you can't guarantee anything, but with the options expiration rolling off, a good run into New Year's with strong inflows, I think based on the charts here, and I'll show you all of them, of course, I think you still gotta lean bullish at this point. So let's start with SPY. We broke out. We've effectively, we reached this ceiling here at 479.5, 480. That's where that big call wall was. I did look at futures this morning, and equities are up about 0.5%. So we're going to have a little gap here as price lifts up. But we want to see these prior highs taken out. This flag structure extended, and so we sit here sitting on the 8-day, you see that in pink, and we're sitting on support, and we're sitting on the midpoint line of the uptrend channel. So that should act as pretty good support this morning as we go forward in our day, see how that holds out. You see the big run that we had off the floor. I've got the recent price action penciled in as a bull flag. Of course, that's optimistic thinking that it holds and that we can break out here at 479 and extend and take the next leg higher. What would give me great pause is if somehow we opened higher with that 0.5% gap. They came down, filled the gap down to 475 and just kept on going. We've got a relative void here in the volume over price structure. That always when you're going down, it concerns me. When we're going up through those zones, it excites me because it's a place where price can move quickly. So if we were to go up, get rejected, come back, fill the gap, and then drop below this 475, I would view that as fairly bearish. And then I would be looking for a move down to test this gap at 472, and then potentially back test the whole breakout down at 470. And of course, that's the real line in the sand. Breakout, back test, that's got to hold at 470. And if at any point, it doesn't have to be today, it could be tomorrow or any time this week, you go up and you come back down below, that's not a good sign, and that would concern me greatly. Here we are in the 30-minute chart, and you can see just the same structure here, 475, kind of carving out this flag. We've got our open gaps below. We've got 470 as our breakout level. But you can see on PPO, we reached a peak and we rolled over, but we have not gone really below the zero line. So from that standpoint, that's what you'd expect to see in a consolidation like that. So, we've consolidated a fast run up, perfectly normal. That's what you'd expect to see. That's what you want to see for price to reset itself, get in a position where momentum can accelerate again, and then take us higher. It's just a very important part on the chart at 475 to be aware of. The Qs have been a little bit more wobbly. We talked about last week, we had this double top structure. Remember on the SPY chart that we just looked at, the SPY price is in the upper half of the channel, of its rising channel, whereas the Qs here are in the lower half of the channel. And we had price breakout of this 400 range, which was a $20 trading range, which on the face of it targets a move to 420, but we got rejected here at this 405, and now we're back below 400. Now, just on the face of that, oh my God, we're back in the prior range, right? Well, that's true. But we're sitting on the 8-day. You can see that in pink, and we're up. We're up 0.5% this morning. I'm gonna sneeze. Excuse me. So we're up 0.5% this morning. So the immediate danger of falling behind or falling below that 400 level is diminished here in the pre-market. So like every other situation, when we've got a gap opening higher off of the pre-market action, be ready for a backfill of that level. Here we are, open up here, 401, something like that. May come back to back test that 397.5 area, but we want to hold there and then drive higher and ultimately break out of this 404 to kind of put this consolidation behind us. If we look back up at our indicators on the 2-hour chart, we've got RSI that's still above 50. We have PPO that has put in a bear cross and is gently descending, which is what you usually see during a consolidation. What I really didn't like is I was hoping for this 400 to hold and have this price, stay in this area. It didn't happen. So we're down at this next big area of value with this large volume over price bar here. You lose 397 and then you roll down to 395, and then it's looking a little bit more wobbly. So I really wanted to hold the line here at 397. Hopefully we'll get this gap up. We could see a move back down just to fill it, but then reverse higher. I think the market is going to do its best to give us a couple of strong days, and then after that we'll see what happens. Here it is on a 30-minute chart. Here is that upper range, and here's where it dropped down back below into our $20 trading range. Really want to hold the line here and see if we can reaccelerate out and then ultimately break above 404 onto firmer ground. IWM really has not done much last week. We made several runs up at the gap, which were turned away. You can see we're really trapped between this midpoint of the trading range. I've got a dark hash line there, about 221. And then you've got the gap that starts at 226. And then we've got the 50 EMA right in the middle. And you can see it here. We've got the gap. We've had all these runs at the gap that have been turned away. I've got the pivot point here this morning at 222, just below the 50. You could certainly use the 50 as well. We're up, a 0.5% on IWM as well. So we're gonna open higher, but not in the gap. What you can do is, as you can always do, if you get an opening here in no man's land, you got to calibrate your sights on two places. Number one, the gap. So if it's a gap and go, and you break into this big gap, you can buy that and then have the bottom of the gap be your stop, or the line that you shoot against with a stop just below. And if price decides to go down right off the bat and fill the opening gap, you can be a buyer either at the 50, or you can be a buyer at 222 with a gap below and see if you can get a run back up to the overhead gap. And then with any luck, you can if you got in down here and you got the break into the gap, then you can roll your strikes and your stops up and have this new level at 226, and then you'll already have a $4 win to start off your new year if you're able to buy at this lower support level, and then you get a bump. Here it is on the 30-minute chart, no difference, same levels. So I'm going to move on here to our FATMAAN names, which were honestly a little soggy last week. Facebook, we talked about this run up to 354, and there we've had a pullback, and on Friday in that final bar moved into this gap, didn't quite fill it, but got quite a ways down there. You can see I've got a little pullback flag down channel penciled in. Maybe that helps you visually tell what's going on, but really the level it's got to hold is right here at 334. I can see price giving us some kind of little scary bar, down below the channel, down below this moving average here. But notice we're at the big volume over price bar here, and we're in this value area. So it would take a lot, to break it down below 330. And if we got below 330, then things start falling away, and then it looks like a bearish setup. This all looks fake up here if it can't hold it. But as it stands now, I would expect this 334 to hold and then make a trip back up to the top of the channel. And then ultimately, if the market holds together, I expect or would anticipate a breakout and just go level to level and see if we can get back up here, come back, take out the top of the old gap, break above 340, break out of the channel, and then up to 344, 346, and then 354. So that would be my hope. Apple, we made another run at 381. It was turned back. We had a nice flag structure forming that kind of failed on Friday, and we pulled back here to 177.50. And I think you can use that as your pivot this morning. You've got a layer of support here at 176, and I think that's going to be pretty good support. You can see here it was support for quite a number of hours, and back here we had some reactions along that line, and you can see here we're at the largest part of the volume over price profile. So I think that if it were to drop down to 176, I'd be a buyer there. If it can hold this level and then break out above 179, 179.25, I think you can be a buyer there and look for 181. And if all else fails and price breaks out to blue sky, new all-time highs, I would be a buyer above 181 with a stop just below. Tesla is having a good morning. They reported their I don't know if it was just their China deliveries or their overall deliveries, but whatever the number was, they blew it out of the water. And so they've gapped up from around 10.55. They're trading up around 11.30, 11.25. And I think what you can do here, number one, you got a couple things to consider. This 11.20 has been a long-standing line of support and resistance, and that's going to align pretty well with this opening gap. So I think what you can do is, if you're long already, then, and you got that, whatever that is, $30, $35 pop, then, actually it's more than that. It's more like $60, $65 pop. If you've got that, then you can immediately raise up your stop to just under 11.20. And if it holds it, then you can look for more. But if it makes any kind of move down into your opening gap, then just take it off. Take your profits, recalibrate, reset. Maybe it comes down to refill this and then reaccelerates. But congratulations if you held that over the weekend. I know some people were talking about it on Friday, that the numbers were coming out, etc. And apparently they did real well. And so you're getting that pop this morning, and maybe it's a gap and go situation. And then overhead, there's some resistance at 11.50, 11.70, and then you've got another gap at 11.90 that needs to be filled. So there are some definite targets. And the nice thing on PPO is that it's had a nice reset, and it's down at the zero line. So this gap this morning is going to start the reacceleration process higher, from a low level, which is great because it's not overextended. And then on RSI, you're going to get a break back above 50. So the posture of the indicators will be supporting higher prices. Microsoft, not quite the flag structure. We lost that. We made a run at 344 to take out the old high back here. It was rejected. And then we had weakness on Thursday and Friday that has brought price back in to 336. We talked about these levels on Friday. what I've done is drop in the fib retracements, and you can see that that 38% level aligns really well with 334, which in turn aligns really well with this large value area here on the volume over price profile. So, make a long story short, if there's any weakness this morning and you saw price drop in to 334, I would be a buyer there. If you saw price hold 336, I think you can be a buyer there with a stop below. And certainly if you get a breakout back above 338, I would be a buyer there with a stop below and looking for a move back above 340 and a half right here. And then if you get that move, I would be looking for a run back up to the top. I did not look where they are pre-market. So the only thing that would like turn me bearish on the day would be to lose 334. That would not be good, because then you're going to come back down to 331 and possibly even down to 330, and that would not be a good look for Microsoft. But no reason to panic yet. Go level by level as we always do. Amazon has not really gotten the Santa rally memo. It has not really done anything. We had flashes of brilliance back here where we came off the floor, made a run up to 34.40, but then we spent a lot of time there, couldn't get out, and then now it's rolled over back to the bottom of the box. So I think the setup is technically pretty easy. You can be a buyer down to the bottom of the box, right down here at 33.15ish. If price were to come down there and hold all these lows, I think you can be a buyer there if you're interested in it. And your technical move at that point is you're just looking for a move back up to the top of the box, right? Bottom of the box, top of the box, fake breakout, bottom of the box, top of the box, bottom of the box, hold. You're looking for a move back to the top of the box. So you've got some intermediate levels there to shoot against as well. So not setting the world on fire, but Amazon has a mind of its own and can take off at any time, as we know. Just make sure you've got your levels alarmed at the locations where you're interested in potentially trading it. Google also has been soggy. We made runs up here at 29.65, made several, rolled over. I've dropped in these consolidation boxes, and you can see that consolidation, break, part of a consolidation on Friday. So we're stair-stepping down at this point. We're in a fairly well-defined downtrend channel. I would want to see the line hold right here at 28.95. Otherwise, you lose this. It's not really big, but it's the biggest volume over price bar we have in the area. We've got voids above and voids below. So if you lose this 28.95 area, you could come down here to 29.70 pretty quickly. So so I think this 28.95 is going to be your pivot this morning. Netflix had that initial burst, been consolidating now between 17.50 and 6.05. We had a late day breakdown last week on Friday where it dropped below 605. I think 605 is your pivot. If it can break back above, I think you can be a buyer there for a run back up to 617. But I think if you're looking for higher prices, I think the bigger, more dramatic move will come if and when price can break out above this 617, 620 area. Then you can see the volume over price bars really drop off. And I think you could have a quick move up to 630 and then a move up to 645. And then it gets interesting very, very quickly. But I think a lot of that's going to have to depend on, how the market is going and how FATMAAN is going as well. So wrapping up here with semiconductors, we had the fantastic move here heading into Christmas, and then coming out of Christmas, we had this fake breakout bar where a big impulsive bar that they sold right away. That's 99 times out of 100. That's going to be bearish. And we had consolidated here at 312.50 for a long time. I tried a long there, didn't work. I got stopped out over here. So I'm out at the moment. But we're down here at the next large support level at 308. To me, that's your pivot. Below 308, you're going to drop down a couple bucks immediately, down to 306, and potentially even down to 302. But let's stay on the bright side. If price can hold 308, gather itself, even if it's consolidating, then come up and break the downtrend channel, your first target's going to be 312.50, and then if it can break that, you can get a run back up to 316. So that's where we stand today on this little abbreviated pre-market look as I get ready to go and head to get my folks. Remember, couple days left in Santa's rally. We got strong seasonal flows in January heading into the market. But the big backdrop is we got a hole in the pool. We got a hole in the liquidity pool now. And we don't really have any fire hoses making sure that pool is maintaining its level or getting deeper. So our backdrop is a lower liquidity environment. So it's going to get tougher. I think things are going to move towards defensiveness. I think we're going to get more choppy action, as the regime is changing. It's like when two rivers come together, there's some turbulent water there till flow reestablishes itself. So we've had an increasing liquidity environment for a long, long time. And that even accelerated after COVID. And now the dial is being turned back. The faucet is being closed. And so that liquidity, even though it's starting slowly, people know that the pool is draining and will start acting differently, I would think, in their trading. So I still think that's going to be a very challenging environment for Ponzi. I think the Ponzi trade is going to have a really hard time. Super high valuation names, bubble names, non-profitable names, all that kind of stuff is going to be trouble. And I think there's going to be a migration to defensive names, defensible earnings, margin strength, pricing power, that kind of stuff. So we're going to have to keep our eyes out for sector rotations, things like that. And one of the biggest questions I have at this point is how are the mega cap techs going to be viewed? Are they going to be viewed as defensive, which they are, or they're going to be viewed as expensive, which they also are. So I think there's going to be a reckoning in the months ahead, how, which way mega cap tech breaks. And remember, that's 40% of the market in those 7 to 10 stocks. So we got to be ready for that. So just getting started. I'm really looking forward to working with you in 2022. So let's go. Have a good day. Have a good day of trading, and I'll talk to you when I get back. This has been Chris Buss with Traders Profit Compass. Talk to you next time. If you're new to the channel, hit that subscribe button, hit the alarm bell, hit post notifications. You'll get sent a flash whenever I post a YouTube content. And if you want to go the extra mile, jump over in the show notes. There's a place where you can register for all my content with a drop of your email. Takes 15 seconds. Then you're going to be in the club. You'll get an invite to the trading room and get your 2022 off to a good start with a good group of aspiring traders working hard to do a great job in 2022. I'd be honored to have you be part of the team. So think about doing that. So again, Chris Buss with Traders Profit Compass. Talk to you next time.